Hello, once again, candidates, welcome to this tutorial. We're going to be looking at the question paper that was written 2021, paper 2, because we are dealing with fixed assets. If you don't have this question paper, you can go to the link and description below and download this question paper, or you can go directly to the page of the Department of Education past examination papers and download this paper. I'm going to put in the link and description as well. Print this question paper and look into it. Let's check. Without any further ado, let's do this question paper. Grade 12 accounting paper 2. It was written November 2021. Why am I doing this question paper? It is because as we are dealing with, let's look at question 4. We were dealing with fixed assets. So I want us to conclude this fixed assets issue so that at least in the next question, you just do it on your own without relying on anything, so that you see that exactly it is what it is. And they also included inventories. I'm happy with that because it also extends our knowledge as to what we are doing. And look at the examiners this time. They give us 40 marks for only 30, half an hour. Can you give your answer within half an hour and get this maximum marks of 40? This maximum marks of 40, and that is where most of the time students after exam, or rather candidates, come up with arguments to say, you don't finish accounting, and they only realize that there were many free marks that they were supposed to get, and time wasted, never again. Practice makes perfect. So my advice to you is to practice. And I'm of the view that you have basic knowledge of accounting before you can attempt these questions. Make sure that formats of accounting, statement of comprehensive income, you know what is going on there, statement of financial position, cash budget, statement of cash flow, all those things. I know that if you have basic knowledge, basic information, and you are attending extra classes, you are attending school, you are attending all these things that has to do with you in trying to achieve the best exam mark. Believe you me, this 2023 you're gonna make it, and believe you me, these classes are for free. So take advantage and let's do it. Question 4, fixed assets and inventories. Let's look at what the examiners required, because this is usually we check what is required. 40 marks, made so much marks for such little time. So just in time footwear pty ltd sells one brand of running shoes. The business uses the weighted average method to value these shoes. The periodic inventory system is used. Required. Calculate the following on 28 February 2021, the financial year end. Value of closing stock, stock turnover rate, and then they will give you the information. And remember, I always advise that to know your format. And in this case, they are asking you to value the closing stock. And usually, if they ask you to value the closing stock, sometimes they might ask you to value the cost of sales. So they go together, because sometimes let's do that, because without waste of time, 30 minutes is very, very short. We have to say 4.1.1 value of closing stock. That's what the examiners requires us to do. And when you do value of closing stock, I also, sometimes they might ask calculate the value of cost of sales. That's why I said they go together. You can't get closing stock. And why I'm doing this is the fact that the next question was calculate the stock turnover rate, and it include average stock, which is opening stock, and closing stock. And that is why the examiners requested you to calculate the value of closing stock. And if you calculate that value, me and you knows that it's opening stock. You add back purchases, you add back carriage on purchases. Carriage on purchases is a transport on those goods, and then maybe there will be purchases, returns, and then less closing stock, which is what we don't have and which is what the examiners request us to calculate. So if you do this because you know your format, and now you look at the question, what is the question? The question balances A, the following information relates to the running shoes. Balances 1 March 2020, quantity 201 pairs, and the total value, that is the opening stock. How much is the value? 101, 090. And now I'm gonna be like a rand value, and I'm gonna put pairs of those shoes. Pairs of those shoes. In terms of units, how much were the pairs? How many pairs? Was 206. That is the opening. And then you add back purchases. Number B, purchases. Information speaks on its own, and the purchases happened during the year April, September, and January before year end, and the total is 2,236,700. 2,236,700. And how many pairs? 2,490 pairs. You look at carriage on purchases, which is information number C. A fixed cost of 25 rand per unit is paid for each pair of running shoes delivered to the shop. This rate was unchanged during the financial year. This is not included above. How much is the fixed cost of 25 rand per, which is what is purchased during the year? How many pairs? 2,490. 2,490 pairs. And then you use your calculator. Open up your calculator and use your calculator, because you must have 25 multiplied by 2,490. 62,250. Nice. Now let's look at the next information, which is DDR returns. 60 pairs of running shoes were returned from the September 2020 purchase. A refund of the cost price was received from the supplier. The carriage on purchases was not refunded. Now you look at this. Why are they telling us that the returns for September is to determine that price of September? Now, how many pairs were returned? 60 pairs were returned. How much is the price per unit of these 60 pairs? 60 multiplied by, they tell us that it's September because they want you to refer to September here and look at the price. It was 900. And then you calculate that to say 60 multiplied by 900. And then you get your value as 54,000. And these were the returns. So we must subtract them. And how many, the quantity of these returns was 60. 60 pairs. And then let's see now how much happened during the year. Everything, calculate, use your calculator there to add those together. Okay, let me to add those together equals to sum of these. Which is the same to say, I'm going to copy that and paste. Use your calculator. And then you see now where we are, we must determine the closing stock. Let's read further. What is the information? Number E. 2216 units were sold at 1,400 each, which it has nothing to do with this information in terms of cost of sales and or rather of closing stock. And we want to know the quantity of closing stock. Look at 28 February 2021. there were 420 pairs and they put it a question mark. Oh, it's very nice. They put it a question mark, and they also told us that the weighted average method was used. And then you look at your closing stock, you say, okay, I have the quantity of 420 multiplied by, let's say, weighted average. Our weighted average is 2346040 divided by 2636, which is equals to 2346040 divided by 2636, which is equals to 890. Now you're going to multiply this by 890, referring to weighted average method, which we dealt with, and just refer to previous exercises, and then you will further understand what we have just done. And 420 times 890, 420 times, okay, just did an error. Let's start over. 420 multiplied by 890, which is equals to 373,800. 373,800. And less, it's less, always less closing stock. And then how much were the units of the closing stock? Were 420. Now you calculated that, and then this minus this, minus closing stock, which is equals to, and this again, which is equals to, now these are cost of sales. Cost of sales. So use your calculator so that you get the correct figures. So your cost of sales is this minus closing stock, and then you get your cost of sales figures. And the question was calculate the value of cost of sales, and already you have this value of cost of sales. 100% with that, no problems. What is the next question? 4.1.2. What is the next question? 4.1.2. Stock turnover rate. Stock turnover rate. Now maybe you forgot what is the formula for this. And if you forgot, it's easy, because you look at your table at the back and you say, okay, stock turnover rate is cost of sales over average trading stock. Cost of sales over average trading stock. And then now you look at cost of sales, and we already calculated that, because now you don't want to waste time. You also already calculated what is cost of sales, and cost of sales in this exercise is equals to 1972,240 divided by average trading stock. How to get average trading stock? It's opening stock 101,090 plus closing stock 373,800. And then anything that is average, you must divide by 2. And then you calculate there, you get your answer. Use your calculator. Let's calculate together to see what is our answer. Okay, let me calculate plus so that I get this denominator correct. 101,090 equals to divide by 2 equals to 273. That is that numerator. 27 denominator 273. Let me start over. 101,090. I'm calculating that denominator. 373. 800 divided by 2 is equals to 273, 237, 445. 237, 445. Now to calculate that is that numerator of 1972, 240 divided by what we just got, 237,445. And then it goes for 8.3 times. 8.3 times. You happy with that? That is the solution for question number 2. And then maybe you can put it in terms of, for argument's sake, let's say, or. Just for argument's sake, if you put it in terms of units, it's still those cost of sales that you just got, 2216 divided by, which is equals to 2216 divided by, same thing, opening pairs plus closing pairs 420, and then divide by 2. Whatever answer you get there, it's correct. And then we go to 4.1. What is the next question? What is the next question? 4.1.3. Just Time Pty Ltd trades in 3 types of footwear. The table below indicates the overall performance for the year. The directors are satisfied with the management of running shoes, but not with the boots and sandals. The boots are imported, and Just in Time Pty Ltd is the only business in town selling these boots. The sandals are locally made, and all competitors sell them at $480 each. Comment on the stock turnover rate for boots and sandals, and identify major problems relating to each product. Code figures. Now 6 marks. They are giving you information about running shoes, boots, and sandals. But in this case, our concern is boots and sandals. And even if on running shoes they can give you question marks, if the question deals with boots and sandals, question deals with boots and sandals, and you must choose it as such. Therefore, we must create the answer here to say 4.1.3. We have boots and sandals. 4.1.3, we have boots and sandals. Let's do this. Boots and sandals. Now the question is stock turnover rate. Turnover rates for boots and sandals, and identify major problems. Major problems. stock turnover rate. Now you compare the two. You compare stock turnover rate of boots, and then you compare also stock turnover rate of sandals. Let's look at stock turnover rate in terms of this information of boots. Stock turnover rate 2 times. 2 times. And in terms of sandals is equals to 76 times. Now, these items of boots compared to items of sandals, you can see that these items are slow moving. It could be for exclusive customers, and at the same time, average is that 2 times per year. And these are purchased weekly. 76 times. So 2 times. They experiences slow sales. That is the problem. And let us look at the closing stock. If there is any closing stock given, stock on hand. You look at boots, you look at sandals. And look at boots, the stock on hand is 708,040. Closing stock. 708,040. Too much stock on hand. And part of the reason this stock can be stolen, theft, can be obsolete, and it's slow moving because too much stock is on hand and it poses challenge to liquidity problems. So these are the reasons in terms of the boots that you must iron out, because you must look at what is given in terms of and give relevant information so that you collect maximum marks. To collect maximum marks in a question like this is to mention relevant figures, and comment. And look at the inverse here. These are purchased in terms of stock turnover rate every week. Every week. And it's good because if it's sold every week, too much demand, and they are very affordable because every week they buy them. And let's look at also in terms of closing stock, what is happening. Closing stock year end 54,000, and you also look at information that is relevant to say orders received from customers is 15,000 pairs versus the sales, and the sales were 8. You see, there is this orders was about 11,400 pairs, 15,000 pairs. And look at the demand. Let's look at the demand. The demand was, or rather, they sold 11,400 pairs. Sales was 11,400, which is equals to. If you give them figures like this, is a clear indication that you were basically using logic 3,600. And let's look at the cost price. The cost price, or rather the selling price, 480. Now the selling price is 480 times 3,600. 1 million equals to 1,728,000. 1,728,000 3,600. Just use your calculator there, multiplied by 480 equals to 1,728 million. Now this 1,782 million, we could not reach target, cannot meet demand, and this is the challenge as well. So loss of revenue, not enough stock on hand, so those are the things that you write. Those are the reasons that you give in terms of sandals and in terms of boots, and any other reason that you may think of. You may also refer to the examiner's solution and check what else could be there. And then let's look at question 4.2. And before we look at 4.2, before we look at 4.2, please subscribe to this channel. You can just look and click subscribe and follow, and remember, these classes are for free, but if you want to donate something, you are more than welcome, so that we make this more even excellent and benefit everybody, including the ones that will be writing beyond 2023. Thank you very much. Let's carry on. 4.2, it's about now fixed assets. Fixed assets. Fixed assets. What about the fixed assets? We speak of 4.2.1. 4.2.1. And the question on 4.2.1 is list 3 points of good internal control over movable property. Good internal controls. But I will leave these 3 marks for you to determine those points where movable property. Immovable, it's a building. You cannot steal a building. Now, when you look at things that moves, what are the controls that you can put in place so that you safeguard everything? Sometimes you can use cameras, sometimes you can record, sometimes you can train personnel to take full responsibility and better responsibility in terms of handling movable properties. You can also use security systems so that you reduce you reduce possibilities of crime, of theft, and everything. So I'm not going to be doing theory questions, but let's look at 4.2.2. Calculate the cost of land and buildings purchased on 1 August. Calculate the cost of land and buildings. 4.2.2. Calculate cost of land and buildings purchased. Happy with that? And the cost of land and buildings purchased, we look at what is the information given. And there is an extract information number 1. There is land and buildings. You can see 2020 it was 5.5 million, and then it increased it to 6.25, and that alone tells us that 6,250 million minus 5.5 million. And then let's look at additional information B about the land and buildings. It's provided Glamia Construction provides an invoice on 31 August 2020 after completing the new storage facilities. The full invoice amount was paid and debited to land and buildings. However, the auditor found that repairs to the old storeroom, 60,000, were included in the invoice. This has not been corrected. Therefore, you also minus that 60,000, which was founded by auditors to be incorrect. And then you use your calculator quickly to check to say 6 to 50 million minus 5.5 million minus 60,000, and then you get 690,000. These were the purchases during the year of land and buildings. 4.2.3. What about 4.2.3? What is the question on 4.2.3? Calculate the depreciation on the vehicles for the year ended 28 Feb 2021. Depreciation on vehicles. Depreciation on vehicles. Now we look at the carrying amount of vehicles, or rather, what is the information about the vehicles? The company has only one vehicle. The depreciation rate is 25% per annum on cost. Let's do the cost price of vehicles. 480,000 times 25%, which is equals to 480,000 times 25%, 120,000. Carrying amount is equals to, let's look at carrying amount, 480,000 less 450,000, cost less accum dip, 480,000 less 450,000, which is equals to, so that it's uniform and professional like you, which is equals to 30,000. Therefore, lesser. Just like we did previous exercise to say, therefore 30,000 minus 1 rand is equals to 29,999. This is the depreciation for you. 4.2.3. 4. What is 4.2.4 asking? Let's check. No more time remaining. 4.2.4 refer to information A and D. The business depreciates equipment at 30% per annum on the diminished balance method. On 30 November, they decided to trade in a photocopy machine for a new model. Now calculate the loss on the photocopy machine. Now, if they, on that date of 30 November, now if they do that, you know your format, you must quickly open your account and do the account called asset disposal. Asset disposal, because it will give you a clear indication of that loss. And if you do asset disposal like this, 2021, Feb 28, if you do asset disposal like this, you will never go wrong. And then we have that particular equipment that was traded in. We're speaking about that equipment that was traded in. Make sure that you must be mindful of the date, because was traded in on the last day of November. And we must calculate also depreciation until such time. Feb 28, we have accumulated depreciation. Accum dip on equipment. And then also general channel. And then let's put lines quickly. And I'm taking long because also I have to put lines. And remember, on your answer sheet, it becomes very quick because some of the things are given. So just take advantage. Just take advantage of free marks. There are a lot of free marks that will be given in this upcoming exam, and I am sure you will take advantage and make yourself proud and get that entrance to the University of Technology next year. And life goes on. Now, if the account is like this, you opened now your asset disposal. You go back and read the information so that you gather the events of what happened. And then these are the calculation. And then you are given information in terms of equipment. The photocopy machine was traded in on 30 November for 88,000. For 88,000. And then just right here, traders control, 88,000. What is the other information about this machine? The total cost of the new model that was delivered on 1 December was for 10,000. The fixed asset register reflected the following fixed asset register of that machine. So they recorded everything about it. Imagine they did not record this information. Controls are weak. So to safeguard, everything must be recorded. So the model was Clearfont X23. It was purchased on 1 November, 1 March 2019 at the cost of 320,000. That cost price is very important for disposing of this asset, which costed 320,000. 30% diminished balance method. We are giving a carrying amount of 224,000 because it's a diminished balance method. Cost price less accumulated depreciation, 224,000. And then we already have depreciation of 96,000. Plus, so much so that is the depreciation that we're going to calculate now, which is that carrying amount of 224,000 multiplied by 30% and multiplied by how long did it take? February, March, April, May, June, July, August, September, October, and it was traded in when? On 30 November. So it's 9/12. So it was used for 9 months and then it was traded. 224,000 times 30% times 9 divided by 12. 5,400. We have 5,400. Now, you take this 5,400. This is the whole depreciation for this asset that was traded in. And then the difference here, that's when we're going to get whether we got the loss or profit on sale of this asset. But they spoke specifically that calculate the loss. So whatever we get here, it's a loss, 146,400. 146,400. Whatever we get here, it's a loss because they said they were specific to say calculate the loss. So which side is bigger to substantiate that is the debit side, which is 320,000. Now, when you take the debit side minus whatever that is given on the credit side, that's when you're going to get the loss. You take your total of 320,000 minus 146,400 minus 88,000, and then you get your loss. Loss on sale of asset. Now we look at the question again. The question asked to calculate the loss on sale of asset, and you got your how many marks? 6 marks. It's a lot. Take these 3 marks. Calculate depreciation on the new machine. New machine is very simple. New machine is very simple. What is the number there? Still number 1. Calculate the depreciation on new machine. Remember, they had this new machine. This new machine costed the entity for 10,000. So it's equals to for 10,000 new machine, new, for 10,000 multiplied by 30%, multiplied by December, January, February. They used this machine for 3 months because it came on the 1st of equals to December. On the 1st of December, that's when this machine came. For 10,000 multiplied by 30% multiplied by 3 divided by 12, 30,750. So that is the answer for the 30,750. What is the next question? We're done with that. What is the next question? Is calculate depreciation on the new photocopy machine and on the remaining old equipment. So let's do old equipment. Old equipment. Old equipment, it's important to look at this extract given. Equipment 2100 minus accumulated depreciation. 2100,000 minus accumulated depreciation of 1440000, and that is the carrying amount of this, which is equals to multiplied by 30% in terms of depreciation, and then we'll get simple 2100,000 multiplied by, or rather minus 1440000 equals to multiplied by 30%, 198,000 minus so much so that was calculated, which is, you can just look at here on asset disposal, 320 minus accumulated depreciation 96,000. Year end is given, you can check that, 96,000 multiplied by 30%, which is equals to 320,000 minus 96,000, which is equals to times 30%, 67,200. 67,200, and it's a minus. So your total amount is equals to 198,000 minus 67,200, and then your accumulated depreciation. What was the question again? Because that is the answer to the question. I can't remember the question, but that is the answer to the question. The remaining old equipment. So this is the answer to the remaining old equipment. And then let's look at the last question. The last question is, we have that 2 marks. The CEO feels that the land and buildings are worth at least 10 million and wants to adjust the figures in the statement of financial position accordingly. Explain why the auditor does not agree. The auditor will not agree to that. How can he fraudulent? Now he wants to create fraud. He wants to create certain impression that these are not. This is your answer, and I request you to answer this last question. And I hope you enjoyed this tutorial, and see you in the next tutorial. Bye.